Hey everybody, welcome to the Social Value Show. I am your host, Alan, and today I wanted to talk, of course, about the coronavirus. There's so many things that have been affected by not only the slowdown in production in China and other parts of the world, but now the kind of contracting of enterprise here in the United States as well. We're talking sporting events and the NBA stopping the entire season. We're talking about weddings and festivals all coming to a close as well. And these are money makers for tons of different companies. They are the reason why these companies exist. And if they cannot make this money, what happens to them, right? And so that's kind of the core issue with what we've been seeing in the stock market as of late. Twice in the last week, we've actually seen the people who control the market pausing trading to make sure that the fear that has completely overtaken the market doesn't completely make it so that everybody pulls everything they have out of the stocks. And the truth of the matter is, this is interesting because it is actually exposing one of the big weaknesses of the stock market and one of the fallacies of really its existence altogether. And that is, it's hard enough for our world to deal with economic contraction. It's hard enough for all of us to be looking at the fact that our customers may not be coming in our doors as much, or weddings may not be booking as much. Weddings are a big part of our business. And the insult to injury is really the fact that all the people who own these stocks, which by the way, yeah, we have regular people with 401ks that are invested into the stock markets, but by and large, they're not the ones who pull out of the stock market. They tend to ride the market through the ups, they tend to ride it through the downs. The people who pull out of the markets are the people who make their living exclusively from the stock markets. And who is that? It's really the super wealthy and the people who, with all their savings and all their investments, have used the stock market as a way to continue to add to their wealth. But here's the thing. All of this comes from a paradigm of ownership, one that actually was never destined to exist in perpetuity. It was really a short-lived story that had to do with mankind's exploitation, our desire to have and to take and to not give. And if you know anything about the School of Social Value, the social value movement, and the tenets that we're building this video system on, as well as our businesses on, it is that it's better to give than it is to receive. And that is so counter to the ethic of ownership, especially as it relates to those who own stocks in publicly traded companies. The reason why those companies exist, the reason why those people invested into those companies is to get more than they've given, is to see a return on investment. I mean, this isn't charity, and I get that. But the big question is it sustainable? And the truth of the matter is, nothing in all of the world that we know of, the natural world, the business world, can grow in perpetuity. And when you look at the life cycle of companies, there's always going to come a point where they've acquired as many customers as they possibly can. There's too much competition and they can't acquire more. I think about the history of FruitCraft. One of our biggest customers back in the day was Whole Foods. And Whole Foods was a company that had been growing and growing and growing for every single quarter for many, many years up until 2015, right when we began our partnership with them, mind you. And they ended up kind of feeling the same thing we're all feeling right now: crisis, fear. Hey, we can't grow anymore, so what is it that we do? And what happened? Their stock price started to go down because investors started to pull out, and they had to have this emergency trigger where they were acquired by another company that might help them grow again. That company, of course, was Amazon. But the truth of the matter is, this happens in every company, this happens in every economy. And this, my friends, is where the booms and the busts happen, where the recessions happen in our economy. If you did not have the volatility of this ownership, if you didn't have the liquidity preference in the way that these investment instruments are structured, when fear grips the marketplace, you wouldn't have insult to injury. This is counterproductive, it is counterintuitive, and it is harming us more than we already have been harmed already by an infectious disease that is disrupting business, making us concerned about our loved ones, and affecting business as usual. So my kind of lesson here for the day, and really my gripe and my rant, is that I hope to one day live in a world where there's no longer a stock market, interestingly enough. But I'm into private market investments. You know, the people who have invested into FruitCraft, they've been stuck with our ups. They've been stuck with our downs. They can't pull out right away. It's because we're not traded on the public markets and that liquidity isn't there, which, by the way, is a good thing, not only for those investors, but also for our employees and for society at large. We have to think long term about what investments mean. We have to think about the relationship between why this business exists and what it does, what it provides to its customers and to its local communities. And if it exists for the sole purpose of bringing value to shareholders and making wealthy people even more money than they already have, then of course the foundation that we're building off of is one that is bound to be shaken, because that was never the intention of the evolution of the human story. You see, my friends, we went from being in the caves to establishing societies to being agricultural farmers, and then society continued to evolve and evolve and evolve to the present day when we've got running water and electricity, and we take all these things for granted. But the truth is, it is the way that we organize and the reason that we are together in a society that matters. And if the core of our economic society is the ownership of business and it's the wealth of the super elites, then of course that has to be shaken, because the human story does not end there. It ends when we realize that we have shared interests, when we have common interests. It ends when we realize that we're better together than we are apart. And it ends with the culmination of a hurricane hitting Haiti and all of us pulling our resources together to help one another. You see, this is not about whether or not we made money in this world. It's about whether we did our part to help each other. And that is why the stock market is doomed to fail. It's built on a premise that was never designed by the intender for the story to evolve, the human story to evolve. And once again, that story is one of love, of sharing, of caring, and of evolving into something that we all deep in our hearts understand is real and is true and is supposed to be. This is the more beautiful world our hearts know is possible. It doesn't come from taking, it comes from giving. As always, remember to do good and to share with others. Cheers.